Ben, this was the most painful day for the stock market since 2008. The Dow closing down more than 2,000 points, a loss of about 7.8%. Local company stocks took a hard hit too. Ford finishing under $6 a share. GM losing $4 a share. La-Z-Boy losing $1.43. Despite the numbers, not a lot of panic among the experts. Our business editor Rod Maloney live now with a look at the gain that is happening somewhere inside the pain. Rod?
Devin, I call it complicated chaos because for all of the machinations on Wall Street, it really just comes down to what happens here in your life. And this is how this can help. Market chaos is always unnerving, and when you consider Marathon oil stocks down roughly 50% this year, it's a signal things could get tough in the overall economy before too long. But there is the flip side. The barrel price of oil is down to just $31, which inflation adjusted is lower than we were paying in the 1980s. What this means is we're likely to soon see, if we haven't already, gasoline selling under $2 a gallon, which means getting around is easier on your pocketbook.
One thing we're all looking forward to drop in gas prices.
We drive probably a couple hundred miles a day.
Especially working families.
So the gas prices are going to help huge.
U.S. Treasuries are where investors go for safety. Today, the 10-year fell to a 0.542, jumping up a bit after hitting an all-time low. Once again, this is where today's chaos matters to you, and that the 10-year is the basis for mortgage interest rates. And if you're thinking about buying a new home or refinancing your mortgage, today is the day. The interest rate on a 30-year fixed is 3.25 or thereabouts. The rate on a 15-year fixed is 2.80. Yes, the amount down, credit score, and financing firm will make a difference in the rate you receive, but it's pretty much now or never the best environment you'll ever find to buy or refinance. And of course, there are a lot of people with 401ks, 529s that are very worried about their losses, and it's a good reminder about diversification and making sure you're checking what you're invested in, and you may want to go back and look at what you're invested in and then sort of try and smooth out the losses, but staying patient is probably the key with all of this. Back to you.
That's really the tricky part here, Rod, for the average investor to look at all this carnage and sit tight.
Well, yeah, and it's a situation where you have to remember this is a 10-year bull that we're in, okay? Since the downturn, the market's been nothing but up. At some point, it needs to correct, and that's where we are. And for all of the down we had today, it's still not considered a traditional bear market. There could be more downside before we see up. So you have to make sure you're diversified, and you want to make sure that if you're a long-term investor, you think long-term.
Exactly right. All right, Rod.